All right, we're here today on another episode of The Industrialist. We are with the president and CEO of Commerce Street Holdings. Something I like to think is his better quality, though, that he's a Red Raider. So, Mr. Dory Wiley. So, what's happening, man?
How you doing, Jeremy? Glad to be here.
I'm good. Thanks for being here. So, Commerce Street Holdings, y'all have a couple entities or verticals in there. You have Commerce Street Holdings, Commerce Street Capital, and then Commerce Street Investment Management. So y'all are, I'll mess this up, I'm sure, but y'all are SEC registered investment advisor. You're a broker dealer, and then on top of that, you're the largest 401k provider, or what's
fastest growing 401k provider in the state.
Yeah. So y'all provide the 401k programs for companies?
Companies, yeah. We do a lot of retirement plans for companies and firms and whatnot.
Yeah. So, I think the first thing we need to get into, and we lightly touched on it earlier, but the state of Texas Tech football, we need to get a win this weekend. It's very important.
We are desperate for a big win on a good team.
Yeah.
Yeah. The first couple of games didn't feel so good, but somehow you look up and you're 2-1.
Yeah.
And you get this going 3-1. That's still a lot better than last year, where you look up and you got a loss to Wyoming, Oregon, and West Virginia. All three very winnable games.
Yeah, and now to double down on it, you have a $250 million South End Zone project that you're asking people money for. So,
yeah, I got thinking after that first game. Slight win over ACU. I'm a big donor to that $250 million. I'm not feeling so good about my investment, but it'll come around. That's they're a bunch of kids, 18, 22-year-olds. It takes them a while. I'm sure they got kind of worked up in that new stadium. A lot of the freshmen, sophomores, big games.
Yeah,
got a little bright-eyed and starry-eyed.
Yeah. No. Have you got to go to any of the games yet this year?
Not yet, but I'm going.
Yeah, I'm going this weekend.
Are you?
So,
Good.
yeah, I'm going to Midland all day tomorrow, and then there's a real estate conference at Tech on Friday.
Yes.
So I'm going to that, and then
I really wanted to go to that, and I couldn't. I got a conflict. We just got back from Scotland, big Scots tasting trip. So if I'm incoherent, it's just
you're still permeating from that.
I'm oozing Scotch out of my pores.
That sounds pretty fun. So what? Just went on a tasting tour?
Yeah, I'm in the Dallas Bourbon Club and another club called Algiers, which I'll need to fit you down.
No, I went down there.
I think you went down there.
Yeah, we went down there one time.
So the guy that runs Algiers puts a Scotch tasting deal, and we went to 14 different distilleries up in Speyside. Yeah. Speyside's kind of a 50-mile area where about 50 distilleries, a third of all Scotch is made.
Okay, so it's like Kentucky and Scotland, right?
Yeah,
for
but real concentrated. Yeah, there's about 150 distilleries in Scotland. A third of them are in Speyside up near Inverness.
So y'all did some barrel investments. Was that in any of those places over there?
I've not invested in anything over in Scotland. No,
okay.
But I got a lead on one that looked kind of interesting, but I don't know. I'm kind of thinking I've got enough invested in that area. I'm a big diversification guy, and I don't like a lot of risk. So, but we'll see. Yeah, we'll see. It's been kind of fun.
Well, let's just kind of start at the beginning for you. Why don't you tell us your story? Where'd you grow up? Where are you from?
Yeah, I'm a big city guy from Brooklyn.
Yeah. You seem like it, right?
Yeah, don't let that accent throw you off. No, I grew up in Rawls and Levelland outside of Lubbock. Okay. Levelland, moved from fourth grade over to Rawls. Rawls is a cotton farming community. I grew up working on a cotton farm from fourth grade on. Yeah. And realized that I'm probably not a real good hard worker in the field. I needed an education. So anyway, naturally go to Tech, love Tech, went there, got my undergrad degree in finance and accounting, switched over from electrical engineering because there were no girls in electrical engineering. There was one girl in my class. And then came to Dallas. Started out as a tax software programmer because the market had crashed, and so opportunities in finance were slim to none. But a year later, I got in to an S&L. It was about $1.5 billion, became part of the Southwest plan, but I learned how to not run a bank.
Right.
But I was in investments and risk management, got some good training. A headhunter picked me up, and a year later, and I got into Rauscher Pierce, which was the largest regional broker-dealer in the country at that time, I think. About 1,500 people. And then we were a sister firm with Dane Bosworth. Mm-hmm. And I stayed there for about 8 years, became head of the financial institutions group. Yeah. And while I was there, I did portfolio management for hundreds of banks, risk management for hundreds of banks, and then also did some work in corporate finance for banks. Left there after they had paid for graduate school at SMU. Mm-hmm. I was insecure, got a bunch of letters by my name, CPA, CFA, RIA,
MBA.
CBA, whatever. I think I'm the most licensed individual in the state for what I do, but it just feels like I'm in the continuing ed business sometimes, and I'm not as smart as I thought I was. But anyway, I got all that stuff to try to be an expert, and joined a couple of guys in '96 at Samco, and then we had a company that went public. And we did a little split and lift out. And Commerce Street was formed in October of 2007. So, but basically my partner and I, Tex and I own the firm, Tex Gross, Commerce Street. And we've been partners for, that's a good question now. What year is it, 24?
24.
So that would be 28 years now.
28. So y'all were partners before Commerce Street.
Yes. So 28 years we've been partners. Okay. That's amazing.
Yeah, it is.
Yeah.
That's awesome. So what is a broker-dealer for those that don't really know?
Yeah, that's a good question, isn't it?
Yeah.
Well, I guess you know what it is when you have to go get a license from FINRA and you're regulated and all that kind of stuff. So kind of like banks were regulated only by the SEC and FINRA and whatnot. But the broker-dealer gives you a license to sell securities under certain securities regulations as well as companies.
Yeah.
And raise capital and things like that. So then you're highly regulated. Not to get too far into it, but there's lots of people that raise capital out there that aren't in a broker-dealer and aren't licensed, and the public doesn't seem to care about it.
Yeah, so that was
and I'm not sure the regulators not care about it. So I've often wondered why we're licensed and why we go spend all this money being licensed and this, that, and the other. But you're not supposed to sell securities without a license and without under a licensed broker-dealer. But there seems to be little enforcement of it a lot of times. Outside of that, all the enforcement falls within the broker-dealers.
Yeah.
Probably the biggest area of discrepancy right now, and I'm getting off on a tangent, but is like with funds, private equity funds, real estate funds, or whatnot. There's an exception if you go raise your own capital, but there seem to be a lot of private placement agents that raise capital that aren't licensed. Yeah, that should be. But what'll happen is if something goes wrong, then they get sued. Then that's it.
Yeah. So I kind of wanted to lead into that because I've looked at this before where obviously we get called on by the capital markets guys who are debt and equity brokers, right? Mm-hmm. My joke is they're not really equity brokers. They lure you in with equity and then they want to broker your debt and they never make you any equity relationships. But
you're a fast study.
Yeah.
It's amazing how many people can't catch on to that.
Yeah. So, but, that's where I kind of started getting in this circle of like, okay, so, we have people come to us a lot now and they're like, hey, can you raise money on this? I'm like, well, I don't really raise money, and then I was just, but then you hear, okay, well, you have to have a license to raise money. You know what I mean? And then it's like, I know none of these guys have license. You know what I mean? And so, but to your point, I don't think anyone seems to care.
They don't seem to care unless something goes wrong. When something goes wrong, then it's going to get really expensive and you're going to wish you had a license.
So I wonder who it's going to go wrong for, right? The equity or the sponsor that they paired them with, right?
Both.
So, and then drag the broker into it. Now, if you're raising money and also like, what if it's a platform? Now, I know you're not an attorney, but I know you know a lot about this when I ask this. But what if you had a platform where people came to you and they're like, hey, help us raise this money and then co-GP sponsor it with us and you put some money into it too. Does that fall into
when you're a part of the principal team?
Yes.
There's a lot of exceptions for that.
Yeah.
So really all it falls into is if you're not licensed, then the investor needs to be aware that, what are they saying? And what governs what are they saying to me?
Yeah.
What is in the pitch material? What are they promising me? What are they not promising me? Because from a firm that's licensed, we have strict rules about what we can put in the material, what we can't put in the material, what we can say, what we can not say. Now, it doesn't mean that unlicensed person isn't governed by that.
Yeah.
They are. But if they're not licensed, do they know the rules?
Yeah. Yeah.
But as far as and in some ways it's an advantage. So like if you go to, you almost have to structure deals like that to go pitch certain pension funds in certain states.
Okay.
Because certain states don't allow some alternative asset products to be marketed to them by broker dealers.
Okay. So
they want them only direct from the principals.
Okay.
So, it's a crazy world.
So, so I guess you've raised money for a lot of banks, and so they probably
banks and funds and whatnot.
Yeah, and they look at. I'm sure the banks are definitely looking at like, is this person licensed to come in here and do this? Right? Is it
right? And companies, we raise money for companies too.
Yeah. What is the licensing that you have to do that? Is it a series?
But basically
blah, blah, blah.
A Series 7.
Okay.
The rules have changed. It used to be a Series 7 and a Series 63, which is a state license. But now you get a base license and then you get a Series 7 and a 63. So there's basically 3 licenses in order to sell securities products.
Gotcha. Okay. All right. And then, so I guess
I don't know this is going to be a regulatory test. I should have brushed up.
No, but it's cool. It's fascinating to me, right? These are the kind of things that I'm interested in. So I want to touch on one other thing too. You did mention that there was no girls in electrical engineering, or was it mechanical or electrical?
It was electrical, and there was one girl, little redhead.
Yeah, and that is a good quality of Texas Tech, because there is a lot of girls. So that's
I went to the business school and took an elective, right? BA 1290 or whatever, that big general class. Yeah. And then I went over after the first year, I went over to the dean and said, "Here, sign this, I'm leaving." And he's like, "Why?" And I said, "Well, it's your fault. You let me take an elective." He goes, "Well, are you flunking in electrical engineering?" I said, "No, I got a 3.9. I'm doing fine." I go, "Well, you shouldn't have let me take that elective." He said, "Why?" And I said, "There's one girl in my electrical engineering class. There's 500 kids in that one. About 200 plus are girls.
Yeah.
If I'm getting smaller, it's because I'm leaving. Sign."
So I want to tell you how I ended up at Texas Tech. So my brother went to Rice. He played football at Rice.
My father played football at Rice.
And he never dated one girl at Rice.
Yeah.
And so when I started getting recruited, he's like, "Hey, I need to be involved in this, because I don't want you to experience that college experience." And so Tech was playing Oklahoma State in Texas Stadium. He gave us,
I remember those games. Yeah.
Gave us a ticket for the recruiting thing and all that stuff. And I was sitting there and I looked at my brother and I go, "If this is an away game, the home games have to be incredible," because this away game's very strong. So that was a lot of my decision-making process. I'd never been to Lubbock.
That's how you make a decision back there. You imagine me coming out of Rawls with 49 kids in my graduating class. So I was pretty happy when I stepped foot on campus.
So were your parents cotton farmers? Is that what the family?
No,
your family
my dad sold insurance to cotton farmers.
Okay.
We worked for Texas Farm Bureau.
Yeah.
My mother was a real estate agent.
Oh, okay. So how did you partner up with Tex? When did Joe
I was
start
at
working
Rouser, and Rouser didn't want to focus on banks anymore after all the problems banks had in the late 80s, early 90s.
Yeah.
And they just bought a firm called Wessels, which was focused on .com technology business, late 90s. And they didn't really want to focus on banks anymore. And one of our traders used to work at this small firm called Samco, and I was frustrated, and he said, "Well, let me introduce you to these guys." And I wanted to know who they were because they'd just sold $1 billion bank in Austin. That should have been a deal that we did. I was mad about it.
Yeah.
Who are those guys? Kind of like Butch Cassidy and Sundance Kid. Who are those guys? And anyway, I went over to met them and said, hey, I need to join them. These are smart guys. A couple of guys. One's an old banker, used to run the bank. Other guy's a bond salesman, but had been covering banks for years. And fell in love with them. We had a great partnership. One of them died about 8 years ago. And but Tex and I have been partners. It was great.
Yeah.
It's just fantastic.
It's funny. I went over there one day to meet with you and Tex, and you were gone. And I met with this first time I met Tex.
He's something else.
He was a hoot, man. He
could sell ice to an Eskimo. He's smooth.
Yeah. No, he was good. So now you also were on the board of trustees for the Texas Teachers Retirement Fund, right?
Correct.
So was that like, were you the most popular guy in the world at that time?
I had a lot of friends. What was bad about that is, they have really strict rules.
Yeah.
Really strict rules. So you couldn't buy me a Coke if you were trying to pitch the fund. Yeah. And so Carlisle and Apollo and, Blackstone, all these guys, they call you up. They want to go to dinner. Mm-hmm. It's a big fancy dinner. I got to pay half.
Yeah.
It was an expensive nonprofit job.
Yeah.
But man, you got to follow the rules. I often say I wish Congress would adopt 10% of the ethics policies that we had at that place. It would straighten the country out.
So when were you on the?
From 2003 through 2009.
Okay.
So while I was there, we were bottom quartile performer, and when I left, we were number one public pension fund in the country.
Wow!
In performance, so it was a very rewarding time.
So that was a nonprofit job then.
That's a nonprofit job.
Okay,
yeah, you're giving back to teachers, which is great.
That's
kind of
awesome.
like we got a project right now where I've been hired by the city of Dallas to work with their 2 pension funds. I don't know if you're aware, but one of them's been in the ditch for a long time.
Yeah.
Dallas Police and Fire. They've made some terrible investments. Tried to make some changes in 2007, but here it is 7 years later, and their 10-year return, cumulative return, is still 2%. They're still got $250 million of problem assets they're struggling with. And so, anyway, trying to work on that.
Yeah.
We got hired in May, did some evaluation, and now the city's trying to decide whether they want to hire us going forward to continue help with their funds.
So would that be a nonprofit position also?
No, not this time.
Yeah.
No. They taught certain people talked to me about going on the board. I offered that up in 2007.
Yeah.
And
no one took you up
because
on
I wasn't a Democrat.
Yeah.
They weren't going to put me on the board. I'm like, well, you can't enact social policy on the board of a pension fund. It should be about fixing it.
Yeah.
So anyway, I told them, they came to me 7 years later, hey, we still haven't fixed this. You want to help? Oh, yeah, but I can get more done as a paid consultant than on the board.
Yeah.
You can do some things on the board, but it's difficult. They have open meetings rules. So if you're on the board and I'm on the board, then we can't meet.
Oh, outside of a board meeting?
Yeah. It all has to be an open meeting.
Yeah.
And so it makes it very difficult to kind of get things done.
Yeah.
It has a noble pursuit behind it, but it can be very limiting.
Yeah.
For what you need to get done. So everything we got done at Teacher Retirement System, it was a struggle.
Yeah.
And we're like, how am I going to get this done? How am I going to get this done?
Yeah. How many people are on a board in something like
well,
that?
at that one, there was, I think there were 9 on the board at Teacher Retirement System. Dallas Police and Fire may have something similar, and so does Employee Retirement Fund.
And it's a 2% cumulative return?
No, it's 2% a year.
2% a year. They need your help.
Well, there's some really good people on the board, and there's some good people there, and bless their heart, they've been struggling with a lot of tough assets. But I think there's some little things they can do here and there that can get them to where they want to be faster. They haven't really thought about.
Yeah.
The question is, how do you get it to be their idea instead of mine?
Yeah. Yeah.
That's the big trick.
So I know there's different size pension funds and stuff like that, but like what size check do pension funds like to start the engine at? Like, if the teachers
it depends. Like those funds, ERF, for example, is Employee Retirement Fund of Dallas, is a $3.5 billion fund. So let's say they have a 10% allocation to private equity, so that's $350 million. Let's say they do, they might do $10 million to $25 million checks.
Yeah.
At Teacher Retirement System, when I got there, we were doing $100 million checks, and that was too small.
Yeah.
I pushed it up to $750 and $1 billion.
Well, because you were at $100 billion, right?
Yeah, well, now it's $200 billion.
Yeah. I mean, that's
so you're not moving the needle. I remember we had a meeting with, what's the guy's name over in Fort Worth? What's the name of that private equity fund over in Fort Worth? It's real big.
Fort?
No, it's really big. It's like Carlisle or somebody. I can't remember. But anyway, he was in one of our open meetings, and the staff wanted to commit, $150 million to them. And I said, well, that's not going to move the needle. We've been in every fund. That's a Texas group. We need a bigger meeting. Yeah. They were like, no, we're lucky to get in. Don't mess it up. I chaired the Alternative Assets Committee, and David Bonderman.
Okay.
And I just said, Mr. Bonderman, we've been in all your funds. You're in Texas. We're from Texas. You want to make us money. We appreciate it. We appreciate you keeping us in your funds. But 100 is not going to work for us. Yeah. We need, I think I asked for 350 or 400 million.
Yeah.
And that's when we first started getting bigger than 100. And he said, well, we're oversold. We can't do that. And I said, well, we had an open meeting, teachers there, cameras. And I'm like, so you're going to tell the citizens of Texas you'd rather have money up in New York and other this, that, and the other than make us money when we've been there from the start.
Yeah.
You're going to turn us down. And he said, well, and I said, well, I want you to think about it right now.
Yeah.
And then come back and let us know. Feel free to go in the hallway.
Yeah.
And they went out in the hallway and they came back in. He goes, we'll get you in.
We'll find more deals.
Staff was not real happy with me on that, but we needed to move the needle.
Yeah.
And so the point being is some of these funds are so big, CalPERS being the biggest.
Yeah.
And it's a problem because if you're giving, say, $500 million to $1 billion to Carlisle, David Bonderman, and Apollo, and Blackstone, and then they're all in on the same deal.
Yeah.
You don't have any diversification. They all just bought McDonald's.
Yeah, they all team up and go buy a company together and
took McDonald's private, and you're you got too much exposure to, and so it's a big problem.
Yeah.
For these big funds, and then the returns on the mega buyouts have really come down. They used to be about 25, 30% a year, and now it's about 10, 12%.
Yeah, and then when these funds are cutting these checks, the pension funds are cutting them into full discretionary funds, right? Like once they write that check, they don't really have control over it. So.
Oh yeah, and so and it's a lot of money.
Yeah.
Now, so the way we were getting control is we moved from the extreme of being too small to big. So we were one of the first ones to start hitting $1 billion. Yeah. And then what we tried to do is we wanted to be meaningful. Don't be their last commitment. Yeah. So if Jeremy's running this big, $30 billion fund, we want to be their first $1 billion commitment, and we want concessions on the fees.
Yeah.
And we want co-investing rights and this, that, and the other. Maybe have you dedicate some staff in Austin to us full time to help leverage what we're doing. And so that vision was Britt Harris, the CIO that I helped bring on. And it was a great idea, and it was a very much a trendsetter in the industry. We were kind of the first ones to do that.
There's a document for that. It's called the World of Nation. I can't remember. There's some document that was in my fund. My largest investor in my fund was it's where they get it. You can't give anyone better terms than you get to match it.
Yeah,
I can't remember the name.
It's on the tip of my tongue. It's fair nation status or something. I don't know what it is, but basically, yeah. So once they offer that to us, then do they have to offer that to someone else?
Well, I guess I only have to offer it back to them if this
MFN, most favored nation.
Most favored nation. Yeah. So if someone's bringing in a bigger check, I don't have to offer it to them. But
right. But there's only so many people are going to stick. So what you do is you define those terms based off of size or speed or first close or certain. We'll only do the first 5 or whatever, and then see if that'll hold up for you. But it's really all determined about demand for your fund.
Well,
right?
As
long as you got plenty of demand for your fund, then you can limit what MFN is. If you don't, then the investors are going to drive the terms. So, but to that point, if you're trying to start a fund and you can go to your next potential LP and say, "Hey, Teachers Retirement System just gave us $1 billion," you know what I mean? Then they're going to probably help you raise your fund. You know what I mean? So let's say you go to ERF in Dallas, right?
Yeah.
They can't ask for that most favored nation because they can't give you $1 billion.
Right. But then you go clip,
but they can give you
million
25 or 20 full fees, and they're happy to get in.
Yeah. No, that's that was kind of an interesting thing that starting a fund was I'm still learning a lot by just going through it. But
that's the way you learn. That's the way I learned it.
And so, we closed July 19th. We called about 70% of the capital, and then
how much did you raise?
10.5 on the first raise.
Good.
And we fully deployed it already.
Good.
So so I'm going to Midland tomorrow.
Make sure and keep sending me info, though.
Yeah.
Keep me updated.
I will. We just made our first distribution on Monday on it, and so we're rolling on it, and it's kind of a balancing act right now. It's like gas brake, because we started creating all this deal flow for it, and it's like, oh,
where do we get it?
We're gonna go get some money. So we're we're working on that, but now pension funds, they don't have to pay taxes, right?
Mm-mm.
So the return they're getting is net to them. That's
correct.
Yeah. So that's another sell. I guess it's just a unique thing. I can't remember.
It's a fun world to manage in. I like managing in the tax-free world because, in our world or personally or whatever, I invest in something, the capital gains issues, taxes, that always limit what you can do.
Yeah.
But it's pure investing in a tax-free world. It's kind of nice. You can reallocate, rebalance, no consequences.
Yeah.
Works pretty good.
Yeah, no, I was meeting with a group here in Dallas, and they have money from CalSTRS, and he's like, yeah, so the money we give them is. He told me I wasn't aware they didn't pay taxes, but that's what he informed me of that. I thought that was pretty. That was just something to think about, right? Like I remember one time I was doing a real estate deal for a group here, and I looked on it, and somehow the Lubbock Fire Department pension fund was the equity in the deal.
Really?
Yeah. I was like, this is kind of an interesting.
Well, I hope they made them some money.
Yeah, I do too. So, hey, something I like to look at every week, and something I think you probably look at from time to time is just the economic calendar. Like, and there's certain things on there that you like actually, there's a lot of things that come out on it every week, varying from week to week, depending on the frequency of the reporting on it. But are there any things in that world that you like to just kind of keep your eye on?
Oh, gosh, I'll probably look at more than the average bear. But I look at a lot of them, because they all have meaning. Market focuses on some more than the other, or what are the Feds focusing on? So you're always focusing on PCE and GDP and unemployment. But I like to look at housing starts and manufacturing index, PMI. I don't know. You get something from all of them.
Yeah.
I mean, but I'm a big earnings guy, so I focus a lot of getting back from the economic calendar back to the market. But I'm focusing on what are earnings doing all the time.
Yeah,
for companies, and where is the earnings coming from? Is it margin growth? Is it sales growth? Is it cutting back? Is it increasing market share? How much of it is company specific? How much of it is the market? Is it supply driven? Is it demand driven? All those kind of things are
Yeah.
Pretty interesting to me.
Yeah. No. Is there like a group of stocks that you watch, or just everyone, like a lot of them, or is there
I kind of move around? I got a lot of. Obviously, I follow banks.
Yeah.
Very closely. For the last couple of years, I've been following Mag 7 pretty closely. NVIDIA really close. I've been all over this NVIDIA thing, which is an incredible company. If there's been a blind spot in the market for the last 20 years, it's been big tech.
Yeah.
Right. But it's different now. So if you looked at Amazon, 15 years ago, 20 years ago, you had this wonderfully fast growing market share gaining company that sold like crazy, stock went up like crazy, but it didn't make money and it had a low margin. And so it's hard for me to really put a big bet on that. But when you have NVIDIA growing at the same or faster pace with a 51% margin and 100% return on equity and a massive market share because they supply all the other Mag 7s and other industries with AI, it's hard not to be, from a fundamental point of view, just jaw-droppingly impressed with that.
Yeah. 51% margin.
Because I'm a fundamental guy, and then here you got me out touting NVIDIA.
Yeah.
Right. But that's, so people try to compare that to, well, it's overvalued, it's got a huge PE. It's nothing like .com, and it's nothing like the Amazons and Googles and stuff when they didn't make money.
Yeah.
This one coins money now.
Yeah. Do they pay a dividend?
No.
Okay. I've always kind of thought that if a company was paying a dividend, they really didn't have anything else to do with the money. So they might be like kind of in a...
It sort of depends. Microsoft's paying a dividend, Apple's paying a dividend, but I think it's token. And so if it's a token dividend, then so it's really, you look at that margin, look at the ROE, right?
Yeah.
So Microsoft still has a really strong ROE, and so I still like that stock.
Yeah.
And the dividend is icing on the cake. It gives me a little bit back.
So we got we timed this perfectly because we got a nice little rate cut today, which, it's funny. We were agreeing to a deal. We agreed to a deal today that we underwrote with interest rates as of yesterday, so our deal just got better, by 50 basis points, which is meaningful,
Yeah, absolutely.
So I really thought it was only going to be 25 basis points, but it came in at 50. What are your thoughts on that?
Yeah, a little surprise in the market for the 50. I think with the election coming up, I was quoted in the paper yesterday. They asked me about what I thought would happen. I said, well, anything over 25 basis points is political.
Yeah.
Powell has gotten political a couple of times away from the board. So, first of all, in December last year, if you remember, all of a sudden the market's forecasting with his dovish comments 6 rate cuts going in 24. And then he did it again in March. And then I've interviewed, one of the Fed governors at a bank conference and talked to some others and know some of them. And there's some divergence there. They're polite about it. They'll only say so much, but you can tell it was like, hey, he went political and kind of steamrolled the others into some of these dovish comments. And the others didn't necessarily feel that way. So what I think happened, I can't guarantee it, is the same thing happened here. Everybody's agreeing on a 25 basis point. That's what the messaging has been, right? Mm-hmm. They haven't been messaging 50 at all. Then all of a sudden, Elizabeth Warren, some of these Democrats coming out, hitting them up for 50 to 75 basis points. And, one of the media was pushing me saying, well, Trump's been pushing them and getting involved politically, and he shouldn't do that. And I'm like, yeah, he shouldn't do that. And he shouldn't threaten to fire Powell, let him be independent. But at the same time, that doesn't mean Harris and Biden are being independent. They're just letting Warren and the rest of them do the work for them, right? So they're both being political. And I think what happened is, since none of the rhetoric has been 50 and the data doesn't say 50, right?
Yeah.
Then it's 25 was what the data said. That's what they all bought off on. That's what all the messaging has been. And 25 has been, is political, and that's confirmed in his comments today, I think, because he used the word recalibrating 9 times. And he's talking about, well, we're recalibrating and don't panic because this doesn't mean necessarily we're going to do 50 going forward or whatever. Then why are you doing 50 now?
Yeah.
There was no discussion whatsoever on why we're doing 50. It was we're doing 50 and it's okay.
Yeah.
and so no why behind it. And that's not the way they do things. So I think the messaging's very confused. I think the market got confused by it today. While it did rally, and if you look at the big tech, which rallies on lower rates, right? Mm-hmm. Because it's all growth. Big tech went up and then it gave it all back. Yeah. The market's like, we're confused. What's the messaging? So it's going to take it a few days to digest, but the market will figure it out. And what it is 25 basis points what it was meant.
Yeah.
Maybe there's going to be a 25 basis points later. Politically, why don't we do it now?
Yeah.
Market looks good. It goes up, and who knows if it stays up through the election. And let's say Trump wins, and he'll be nice to Powell, right?
Yeah.
Maybe he won't fire him.
Yeah.
But we'll see.
Well, so I the whole Fed economic policy was to curb inflation, right? The raising of interest rate was to curb inflation, right? Do you really feel like anything's gone down in price?
Well, the inflation is the rate.
Okay.
Right?
Yeah.
So it's not going to go down. It'll never go down.
Yeah.
We're done. We're cooked. It went up and higher food, higher bacon, higher restaurant bills, and I'm mad about it and you're mad about it, and there's nothing we can do about it. The question is, can we slow down the rate of the increase?
Yeah.
That's inflation.
So.
And quite frankly, I don't know that it's slowing.
Yeah.
Which is probably what you're getting at.
Well,
it's slowing. It's not really slowing as much in something like food and energy is still tough, right?
Yeah.
Housing is starting to slow a little bit, but it went up a lot. I think when you talk to the Fed governors and you talk to a lot of economists around the country, offline, none of us trust the data. Yeah. Right. So when you look at the unemployment numbers, right? Remember, you had that $800,000 job adjustment, which is unheard of, which meant the data all year was wrong.
Yeah,
all year was wrong.
Yeah,
and the market doesn't correct for that.
Yeah, right.
Well, that doesn't make any sense.
Well, that's
but they don't trust the data, and the Fed's been very vocal about it. We don't trust the data, even Powell.
Yeah,
they don't hammer it too much, but they'll slip it in.
So, I have this feeling that to your point, real estate has really gone up. But now that you get a 50 basis point drop, I feel like people are they're of the mindset that. I don't think it's been long enough is my point. And here's why. Because I think everybody's going to go, 50 basis. Oh, they just dropped the basis. The economy's fixed. Boom.
All's good. They'll go out and skip and dance. Yeah. And you're in real estate, right?
Yeah.
So all these real estate people have been, they've got a little, real estate god they've been paying homage to and, offerings and this, that, and the other. Wait for more. They want a rate cut, right?
Yeah.
Because they want to get those cap rates down. That doesn't mean the 10-year is coming down.
Yeah. Well, I think psychologically, here's something, we've started looking at a couple more marketed portfolios, which are a lot larger deals and they don't usually tend to have as much yield in them. But what I'm seeing right now is when a group like KKR or Blackstone or Link, their industrial group, they have redemptions, right? So they have timelines that might not actually time out with the market. And what I've seen in the marketed larger deals is that there is actually meat left on the bone because the sophistication of the seller understands the dysfunction in the capital markets at this time. And
he doesn't have a choice.
And he doesn't have a choice on top of that, so he needs to move it. And then the other thing we've been up against is we're really good at buying off-market opportunities, right? Well, all these individual owners of properties, which is usually our source of deal flow, have had all these real estate people come in. Prices are going up. Here's an offer. Here's an offer. You know what I mean? They bought their building for $40 a foot, their last offer was at $150 a foot. So in their mind, they're like, this building's worth $150 a foot. But mind you, that last offer came in January of 22, and we're dramatically in a different place now. So but the individual seller has more emotion tied to it, or just they're more committed, right?
Loss aversion.
Yeah. Well, I mean, someone at Link, right? They're selling a spreadsheet. Someone at Blackstone, they're selling, hey, we got to move these assets. We got to sell these things. But it's to one person where that one building is there. This is it. This is the shot, and a lot of times when I see it was someone that started a small business, they bought their building, their small business never really made a ton of money, but they end up owning that building. And that wound up being their best asset. That was their best asset. It's got lost. And now it's going to get adjusted back down. So my fear is that it's going to be tougher. You want some more water?
No.
It was going to be tougher to get those people psychologically back on board now that he just dropped 50 basis points. So that's why I've been trying to look at some of these bigger marketed deals. I'm like, I know we have to compete on them, and I know the yield's not there, but the basis on these assets are great because they're leaving them at a point where you can make some money on them down the road.
Well, it's data points, right? Yeah. So you're talking about office space, and as well as I do, I mean, nothing's been moving. Mm-hmm. We've got something on the tollway. It's got 85% occupancy. It's in Frisco, and there's no equity for it.
Yeah.
Yeah. And you're like, wow. If there's no equity for that, there's no equity for anything in the United States.
Yeah.
Period. Mm-hmm. And so we got to have some data points of trades.
Yeah.
And when we get those data points of trades and they're showing what stuff is, price per foot, this, that, and the other, then things will start to move.
Now, do you think, I think office has fundamentally a lot more problems, though, to ever get capitalized again.
It does. It's going to take more than a 50 basis point cut to get that moving.
Yeah. And I don't know.
And it may not be there.
Yeah.
Right?
Well, and then the other thing, I mean, we have another, call it 45 days here of uncertainty, right? And markets don't like uncertainty, right? It's
they don't like uncertainty.
Yeah, and so right now we're sitting in this window that is closing.
Anything goes.
Yeah.
Right? You know, war with Russia.
Yeah.
With China, Israel, Ukraine, everything. Trump assassination number 45.
It's unbelievable.
So. I tell our people, anything goes right now. Do not be naive.
Yeah.
And do not be naive to think that the market can absorb all this uncertainty. At some point, it'll shake it up.
So with the uncertainty in it right now, what do you think? How does institutional equity think? How does like family office equity think? And how does retail equity? They all think the same way right now, or are they?
It's amazing. I tell people, institutional thought is a lot like family office and a lot like retail. Mm-hmm. They're human, right? Yeah. Humans run all of them.
Yeah.
And so fear and greed always run everything.
Okay.
Now, sometimes some have more discipline than others.
Yeah.
Now, whether that's an institutional, family office, or retail depends on the person.
Yeah.
Okay. So, but in general, it's perceived that institutional has more discipline than retail. But in general, that may be the case. But in extremes, and 1, 2, 3 standard deviations, they break.
Yeah.
Right. And fear takes over as well.
Yeah.
So with that condition, having said that, what are people thinking? I think a lot of people are being kind of retailish and kind of fearful versus super disciplined. But a lot of people are keeping cash. A lot of people want to wait to see how the election comes out.
Yeah.
And so I was just visiting with a very large institution, before I got here today. Mm-hmm. And he said, well, we're not going to do anything until, after the elections. And I said, well, I think that's a mistake. I go, what you do is you devise a plan of attack of what you're going to do, assuming Trump wins, and one assuming Harris wins.
Yeah.
And then maybe even a couple other tracks, assume a nuclear bomb goes off, or this, that, and the other, or the market forget the cause, right? The market drops 20%, the market drops 40%. What are you going to do? What is the plan for those? Don't just sit around and go, well, I'm not doing anything.
Yeah.
Until after that's crazy. You should have a plan of attack for all those scenarios right now.
Yeah.
And to the extent you can enact it and adjust, you start now. So for this particular company, it's about buying some other companies. Well, I'm not going to buy anything till 2025. You wait until after the election.
Yeah.
Then now you're one of 50 guys that are calling me going, hey, I want to buy these companies.
Yeah.
Well, right now there's zero.
Yeah. Well, I had a saying, everybody had that saying, stay alive till 25. You hear that? Mm-hmm. Mine was scoop and score in 24.
Yeah.
Because
get in position.
Well, but back to you're talking about discipline, right? Our discipline here is to create deal flow. The more deal flow we create, the more opportunities we see, the more no's we get to say to find the one we want to say yes to.
Absolutely.
And then on that, and then from there, and it makes, and we just focused on that. And then we focused on owner financing throughout all that. I would say probably 7 of our last 10 deals, we got owner financing achieved on all of it. We went out and made a great template to go with our LOIs and said, hey, look, banks suck right now. But look, you're in and a lot of times we're finding these way under market deals. And it's but hey, right now, the NOI you're getting on this building is probably equivalent to the note I'll pay you on this. And you can be I'm going to give you 35% down, and then you're going to be in a debt position. So it worked out great. And we've got some incredible terms on some deals from that. So we really just focused, that was our, I guess, pivot or whatever.
Once you get out of the uncertainty, right, then everybody's going to be in the market and you won't be able to get those deals.
No.
So I applaud you for that. I think it's a great time to be a buyer. It's a great time to be an investor. It doesn't mean you have to do anything stupid. It doesn't mean you don't hold cash right now.
Yeah.
And it doesn't mean you don't manage downside risk, but you don't want, it's kind of like banks. Banks are a big part of our business. Mm-hmm. Banks are notorious for lending money freely when the economy's good.
Yeah.
And then pulling the horns when they're scared. Right. Well, that's when you should be aggressively lending.
Right.
Because now you can go out to everyone and you can get more loans and you are the market.
Yeah.
The market's not the market. You're the market.
Right.
You define the terms, I want a guarantee. I want your firstborn. I want double digits. I want 50% down. I want you to send your son over to work for me for free. You are the market. You get to define what it is.
Well, so that to my point, we try to really increase deal flow to make our own market, right?
So if you're getting people to do seller financing, you're defining the market.
Right. And, another thing we do is we probably see anywhere between 100 to 120 million a week in opportunities.
That's good deal flow.
So that deal flow is so high. Like the other day so our deal flow is getting there on the debt fund side stuff too, because someone came to us the other day with the deal. And they were like, hey, we have this, but it was a franchisee. And I'm like, man, we're getting corporate guarantees from Chipotle over here. I don't need to do a franchisee deal. We have pipeline of that. So, hey, thank you, but no thanks. So it's it's funny being now in the loan side of things, how many people call us in a desperate situation. And I'm like, we don't do desperation loans. We don't need to,
Right.
I don't want to do that. Desperate, you're not thinking straight right now. So it's been interesting seeing that. But I agree, make your own market. And then I think a lot of times when a new LP interviews me, they're like, well, and throughout these past couple of years, they're like, so what do you think about the market right now? You kind of sitting out of it? I said, listen, I'm an investor. I invest in good markets. I invest in bad markets. I invest in all of them.
But the investor wasn't really asking you a question, was he? No. He's saying, you shouldn't be investing right now. Are you crazy if you lost your mind?
Yeah.
And you're saying no. But it's amazing how. So that's an investor driven by fear.
Yeah,
and it's also, investors go with the herd.
Yeah,
right. Whatever the street is doing that day, like private credit's been really, really strong, and it looks like a big bubble out there. You got to be real careful in it. And, they're like, oh, well, nobody's doing real estate right now. Why are you doing real estate deals?
Yeah.
You're like, well, it depends on what it is. I'm not doing construction loans on office buildings.
No, right. Yeah, exactly. Well, I look at those people and I say, well, I think if you're not doing stuff right now, you're not an investor. And they go, what do you mean? I go, you're just a speculator.
Absolutely.
Yeah. And so we're just different. Like, I think if you're waiting for things to change it's kind of like
then you're a follower.
You're just a follower. Like,
you're just a follower and you miss.
So to that point, please give me your money. This makes a lot of sense for you.
Well, that's the problem with the hedge fund industry. We used to run a bank hedge fund. Mm-hmm. And the problem was, since it was in banks, we had two. One that was fully hedged. And so it was boring, clicked out about 12% return every year, but had no market exposure, right? Because we equal long, equal short. The other one, we ran a long bias. And so people are always in and out, and they're trying to time it.
Yeah.
He lost their shirt because they would be, we averaged 21% for 11 years in that fund.
Yeah.
And, but it was so hard to get people, banks are out of favor. Why would you want them? I'm like, well, we see a lot of good deals, and here's why.
Yeah.
And here's why you ought to be doing this. And so an investor that's susceptible to the fads of investing in the market and what everybody's doing and fear will go, well, that guy's just trying to sell me.
Yeah.
I'm going to watch him. So you send me your tear sheet every month, and you keep printing returns, and I'll invest in them. Well, your returns go up, and up. And then they get in. You're kind of like, well, you're getting down to the top now. Bank stocks are overvalued.
Right. So, well, okay. So we got the election coming up. I'm not asking you who you're voting for, but who do you think wins?
Well, I've done a lot of research on this. So some people think I'm crazy, but I keep a lot of data on this.
Okay.
And there is a lot of voter fraud. So I don't know who will win. I know who should win.
Yeah.
I mean, the plenty of votes for Trump, he got 70 million the last election and lost, which is 10 million more than Obama. And so they got a guy campaigning out of his basement, all of a sudden gets 80 million, right?
Yeah.
From 447 counties.
Yeah.
It didn't make any sense compared to 2,500 from Obama. None of the math works.
Yeah.
None of it works.
Yeah.
But yet the mainstream media, even a lot of Republicans or whatever, would tell you, oh, no, there was no voter fraud. But none of it's been tested in the court. And the evidence is all out there.
Yeah.
And from what I can tell, it's all gearing up again. Now, whether it'll be enough to overcome what kind of, the key states will be Wisconsin, Georgia, Pennsylvania, and Arizona, just like last time.
Yeah.
And, we have voter fraud problems here in Dallas, so I'm working with some people to try to fix some of that. I don't know if we can or not. It's very, very difficult.
Yeah.
Today, I'm bouncing around, but Mike Johnson, Speaker of the House, trying to get the budget bill passed, and in the budget bill, it's quite simply, hey, you have to have a voter ID or you can't vote.
Yeah,
and Democrats are like, we're not going to pass it. We'll shut the government down.
How dare you do that?
Yeah, we're running million plus people a year. That's a lot of votes.
Yeah,
every year, over 1 million people, illegals a year coming in, and so. That's just a part of the fraud. Yeah. That doesn't count all the other, mail-in ballots and this, that, and the other. I think it'll be harder to do the mail-in ballots this time because we don't have COVID issues, right?
Yeah.
But that's where the interesting thing about this October surprise is, because if there's something going on, I'm a JFK assassination expert, right?
Yeah.
Okay,
right.
So I gave 30 lectures last year, and this first assassination with Trump is like, okay, I know what happened. Yeah. You don't have violations of protocol in the Secret Service. They run a $4.5 billion budget.
Yeah.
They got a lot of money. They know what they're doing. And they've been knowing what they're doing. They've been protecting presidents for 100 years.
Yeah.
They know exactly what they're doing. The violation of protocol with Trump was a lot like the violations of protocol we have with JFK.
Yeah.
Okay. Now people are like, oh, those are not bad guys in the Secret Service. I don't need but a few.
Yeah.
Everybody follows orders.
Yeah.
So we can prove that the Secret Service, we don't have time today, but we can prove the Secret Service was co-opted and compromised and contributed to the assassination of President Kennedy.
Yeah.
And we had all the same things happen again with Trump. Okay. Yeah. So now you have the second deal. So my wife asked me when he got elected, will they kill him? I go, no, they don't want to make him a martyr like they did with Kennedy.
Yeah.
They'll set him up with fake Russian, women and Russia hoax and this, that, and the other, and impeach him for stupid things, but they will not try to kill him unless they're really, really desperate. Well, now we've got two.
Yeah.
And the second one, same type of thing, is, the Secret Service caught the guy. Thank God they did a good job. Give me a break.
Yeah.
It's one hole away.
Yeah.
One hole away. Looking through that fence, one guy.
Yeah.
If they're desperate enough to try it once and miss, twice and miss, what's going to stop them next time? This is a quote from a Secret Service guy.
Yeah.
What's going to stop them next time when they have a 18-wheeler full of commandos pull up to the golf course and charge and you got one Secret Service guy?
Yeah. If
they want to take him out, they're going to take him out. They're trying to do it with these one-off militia guys or whatever, and of course, we cremated the body and, there's no autopsy and, it's all the same stuff that we got with JFK. It's the same old playbook. So whoever's trying to kill him, right, which is it deep state? Is it Soros related? Is it China? It really doesn't matter.
Yeah.
Whoever's trying to kill him is going to keep doing it until they kill him because they're desperate.
Yeah.
Because they're worried that they're not going to be able to cheat enough to win.
Yeah. That's exactly right.
Yeah. So it's a very interesting time period.
I mean, if I'm Trump, I'm calling Blackwater and going, I need my own dudes. Like, give me my own crew because this is
well, that's what RFK did.
Yeah.
So I got to know RFK a little bit because I got him to do an intro to an 8-part series that I was doing for the University of North Texas last year on his uncle.
Yeah.
And if you remember when JFK was killed, Jackie and RFK, they were onto it. They knew the CIA and everybody was involved. Mm-hmm. And they rejected Secret Service protection going forward.
Yeah.
And they used their own. They didn't trust them. And so back to RFK Jr., he's got this high-end commando group. I've met some of the guys. When he came to Dallas for a fundraiser, I went, and I was kind of scoping out how they were doing the building and all that. And I mean, they were, but at the same time, Biden and the administration would not let him have Secret Service protection, which was a good political ploy for him because it made them look stupid and bad. And they're freezing him out of the Democrat Party, or at least I thought it made him look that bad. And I guess no one else cared. But in reality, he didn't want that Secret Service protection.
No.
He wants his own.
Yeah.
Because he's terrified. I'm telling you, who wouldn't be? God bless him for even running.
Yeah.
They're taking shots at Trump. They took out his uncle. They took out his dad.
Yeah.
And
then he backs Trump. So
and then now he's teaming up with Trump.
Yeah. No, it's
I didn't want him to ever leave the Democrat Party because I knew that once he got out of there, he was never going to make it as a third party candidate. He didn't have the funding. Ross Perot had the funding.
Right.
He wrote a check.
Yeah.
Never had the funding to do it. But at the same time, they were, the Democrat Party, I mean, it's not run on votes, right? I mean, how many votes did Kamala get? To run for president by Democrats.
Yeah.
0.
Yeah.
Right? It was just given to her.
Yeah. Well, I guess, if you didn't give it to her, you automatically admitted she was a terrible vice president.
Yeah, I guess so.
I always thought it was funny that we can drive down the toll road at 90 miles an hour and they can get your license plate and send you a bill, but we can't count votes properly.
Oh, we can count them properly.
We just choose.
Yeah,
they just choose not
get
to.
the results. You know, if you stayed up all night in the election, we get the results. We see how far we're short.
Yeah,
and then we get mail-in ballots and count them until we get it fixed.
Yeah,
and sometimes it takes 2, 3, 4 days, whatever it takes. We do it.
Yeah.
And you only got to do that in a few counties in the right places to make it work.
Yeah. I just at some point, does it not all go internet, you know? Can they not just make, I mean, everybody.
Well, it ought to all be ballots.
Yeah.
Oh, hand ballots.
Yeah.
It ought to be a hand ballot.
I always thought like the Scantron that I had like in high school. Just there it is. I'll count
hand
it.
ballots and a license.
Yeah. So, here's you look at a lot of sponsors on a lot of deals, right? What do you look for in a sponsor whenever you look at someone come and try to?
Well, character's number one, right?
Yeah.
J.P. Morgan said that back when they were forming the new Federal Reserve at the time. They personally bailed them out of the 1906 panic.
Yeah.
And they asked him, what's the number one important thing in lending? And it was character.
Yeah.
Right. And so I think back in the South American debt crisis in the 80s, I was talking to somebody from Citigroup. And they lost a bunch of money on South American debt and stuff. So, we did all this analysis to see whether they could pay us back. We forgot to do the analysis to see if they would pay us back.
Yep.
And so when you get in a ditch, will that guy do the honorable thing, try to get your money back?
Yeah.
Either as an investor or lender or whatever.
Yeah.
So I think that's the key thing. You can't sacrifice character. It's my number one. But, experience, team, track record, all those things are very important.
Yeah. Got it. Well, let's see. Something I kind of like always to ask on here. What's like the most unique deal you've ever pulled off? I know you've been in a bunch of them.
Oh, my gosh. It's, some are more interesting than others.
Yeah.
I think back on one deal we had a broke thrift owned by a Taiwan firm that didn't think it was broke, and they hired us to sell it.
Okay.
And we were like, oh, God, it's kind of, I say broke, it was kind of busted and had a lot of hair on it.
Now you said a thrift. What do you mean a thrift?
Savings and loan.
Okay, got it.
And so this is a while back. And here was the genius move by it. It was, if I brought in a competent buyer, then I wouldn't have a product to give him.
Yeah.
Because they weren't going to deliver it to him because they thought it was worth more than what it really was. And regulators are involved in the banking industry, right? And you got to get approval. So what we did is we brought in a buyer that didn't have the money, and that thought he could buy it.
Yeah.
And really believed that he did have the money, but we didn't think he had the money, and he really didn't have the money. And so they were perfect for each other because they had these unrealistic expectations about themselves. And the regulators really wanted to make this deal happen. And so we thought, if we put them together, this guy really believes he has money, but we don't think he can get it. And this guy thinks he's got a great bank, but an unrealistic price. This guy will pay the unrealistic price, but he doesn't have the money. But the regulators will approve the deal to get rid of it. And once we put that together, then we got Lehman Brothers to raise the money.
Yeah.
It was incredible. It was an incredible deal. It was unbelievable. And it wouldn't have worked with any other buyer.
So that sounds like something I like to call the day two fools met, right?
Yeah. That was a day two fool. Another one I'm thinking about is we sold a bank in Midland to Bank United, which was Lou Ranieri. Remember him from Liar's Poker fame. Solomon Brothers, big trader, made a bunch of money. He had Bank United, and we sold him a bank, big old price, 2.75 times book in Midland. And then they didn't assimilate it into the bank. They just kind of left it there. And I remember they didn't even know where Midland was and what they did, a bunch of New Yorkers. So fast forward, the bank sells to WAMU and Washington Mutual. And they assimilate it. And then about a year later, he called a head guy, one CFO at Washington Mutual, calls me and he goes, "What is this little bank that you guys sold them in Midland, Texas?" And I said, "Well, how's it doing?" He goes, "Well, not very good. Can you sell it?" I go, "They assimilate it?" And he goes, "No." So we looked at it, and they had just not done anything with it. And so I tried to get all these banks to come in and look at it, and they come in and do due diligence, and they were just like, walking out because the credit files hadn't been updated and they couldn't tell what they had. They were terrified, this, that, and the other. I finally convinced a guy, one of the bankers, say, "Look, come in and just look at everything. Tell me how deep the hole is, okay? Because you never know what'll happen here." Yeah. Well, long story short is we had sold that bank for $48 million, and these guys wound up buying it 3 years later for $8 million, and WAMU guaranteed the whole loan portfolio. And then all these other buyers were mad at me. So, "Well, we know it was going to be that good a deal. We'd stayed in and performed it." I begged you to.
Yeah.
Begged all of you to look at it. Anyway.
Right. Well, what's a book you like? What's a book that's changed your life? Or
Bible.
The Bible's a great answer.
Yeah, got to get the Bible. I go straight to hell if I don't say the Bible, so you know that.
Well, we're keeping tabs.
We're marketing for the Bible.
We're turning those answers in, and you pass.
There we go.
Sir.
I pass it. All right.
No, but is there another book that you've read that really?
I am a book nerd.
Yeah.
I have thousands of books, and I'm a big history buff, so I read a lot of history books. I have lots of books, and I don't know how to answer that question.
Yeah.
Because I read all the time biographies,
What's your favorite biography you read? What's a very interesting biography that sticks out?
So I love reading about Churchill. The founding fathers are really interesting to me.
Yeah.
So maybe the more interesting question is, I do some lectures on history, not only on assassination, but on the presidents and the founding fathers and things like that. A lot of them are very, very interesting.
Yeah.
Because I tell people everyone should love history, and they're like, "Why? I don't like it. It's just boring." No, it's not. It's about people.
Mm-hmm.
And it's about us.
Yeah.
If you want to know who Jeremy Mercer is
mm-hmm.
and what he stands for, you got to not only look at his parents, but the community that they lived in, the city, the state, the country, and what did all those ancestors do, and where did they come from? What was their belief system?
Yeah.
That all goes back to the Puritans.
Yeah.
And that's where we came from. Yeah. And how many of us are really experts in our history to know where we came from? So as an example, people are like, we're a democracy. No, we're not. We're not even close to democracy. The founding fathers hated democracy, mm-hmm. and it's in all their documents. They used to call it a mobocracy. Yeah. Why? Well, if the mob voted that murder was good and anarchy was good and illegal voting was good or whatever, right? Then they got it.
Mm-hmm.
And no democracy, as Ben Franklin always said, ever survived because of that.
Yeah.
We're a republic. We've always meant to be a republic based on a system of laws and morals. Yeah. And we don't even know who we are. So now we're getting back to a long way of go. Who are we? We come from John Quincy Adams. We come from Thomas Jefferson. We come from George Washington. We come from Frederick Douglass. We come from all kinds of really interesting people that we know a little bit about, but we don't know a lot about. Yeah. And we also don't come from, we come from people we don't even know.
Yeah.
Right? The first person to die in the Revolution, the Boston Massacre, was a black guy, Crispus Attucks. What do we know about him?
Yeah.
We don't know a lot. And there's a lot of interesting things, right? I was in Scotland, and my wife brings up, and the group brings up afternoon tea. So why did we stop having tea in the States? And I go, it was an act of rebellion. I go, John Adams wrote about it, saying, "Boy, I sure miss my afternoon tea. I'm just doing coffee now, but I sure miss it. But there's no way I'm ever doing afternoon tea again."
Yeah.
It's an act of rebellion against the British colonies.
Yeah.
Bro, the British mother country.
That's interesting.
So anyway, that's a long-winded answer to go. I love reading about all of them.
Yeah. What's something about Dory Wiley that most people don't know?
Well, you know this. When I was in Lubbock, I used to be a DJ. So I had about 12,000 records, but much to the annoyance of my wife. And I love music. I love dance music. I love country, rock and roll, jazz. I still have little apps where I beat mix stuff together. We'll play for you. I know you like to play. Yeah. You play live. I'm not skilled enough to do that. I have a little bit of an ear for music, but I can't play and I can't sing.
Yeah, it's fun. I love music, man.
Yeah, I love music, and it's a release for me, and it relaxes me.
Yeah, I'm going to a concert tonight. So
where are you going to?
I'm going to Slipknot.
Oh,
it's
I still need to get you over to the house to play for.
Oh yeah, I will, man. Let me know.
Yeah.
No, it's they're a metal band. But they're a very interesting act.
What do they play?
They play. They have their own. It's very heavy metal, but they're very.
So you got a lot of rocker in you, huh?
Yeah, I got a lot of rocker in me. But these guys are pretty interesting. There's 9 people in the band, and they've been together for 25 years.
What are they playing? They got what are they?
They have like
washboard or something.
3 percussionists, a DJ, keyboard player, 2 guitar players, bass player,
and they're rock.
Yeah, or they're metal. They're like heavy metal.
Heavy rock.
I would call them, if Halloween was a band, it would be these guys. They have all these, these outfits and all this stuff. But it's just an incredible production. And but the singer, in my opinion, might be one of the best vocalists I've ever heard. And
you get a really good rock band singer. Yeah. And I think anyone from like a Steve Perry to Axl Rose, or some of these guys, the voices are just
Well, this guy, his name's Corey Taylor, and his vocal range is like just beyond what So he plays in this band. He plays in multiple bands, but like
is this a Dallas band?
No, they're out of Iowa.
Okay.
But he plays in multiple bands. Some of them are a lot softer type bands, and like when you hear him play an acoustic song, it's like golly. Then you hear what he's able to do with his voice in this band, and you're like, oh my gosh, it's incredible.
I have to check them out. Are they on Spotify?
Yeah, I don't know. Unless you're into that, you probably won't like them. It's pretty
heavy.
It's pretty heavy.
Yeah, I got hearing aids now. They'll scream at me.
So, but it's pretty interesting.
A little bit. I'm kind of like going to these smaller venues, and
those are fun. So, but well, man. Thanks for being on today. That was really interesting. I think it's always good to hear perspective from people that sit at different perches of the industry, of the things that we kind of the ecosystem we're all in. So I appreciate you coming on and telling your story today. So that's really awesome.
Glad to be here, and good to see you.
Yeah,
thanks for having me.
All righty, Dory Wiley. Thanks, man.